right. Hello, everybody, and welcome to the stream. It's great to be back, and I hope everyone's ready for a massive week. FOMC, non-farm payrolls, and Apple earnings. Yeah, it's all happening this week. Just to remind everyone, into Apple earnings, we will have a bunch of, let me just quickly bring this up. Should be somewhere in here. There it is. We will have a decent amount of course, volatility through some of these events. And we know that Apple is expected to be around 4 to 5% based on the options. AMD also Tuesday after hours. How's everyone been? I hope you've been very well. Thank you for joining us here. I know it's been about 3-4 weeks off since the birth of my son, but yeah, we're back. And I've got some big announcements later on the show about some improvements. You know, it's always good to step away for a few weeks because you think about things and you think, well, maybe we could be taking on feedback. If you have feedback for the show, let me know. We are going to be making a few improvements to the daily show over here on YouTube that we do. If it's your first time, of course, subscribe. And we'll be doing some massive improvements to the live shows as well. I'm going to put a bit of money into some tools that I know do work and help quite a lot. And I'll be sharing some of those things here on the live streams as well. So look forward to that. A lot more in-depth movement into flows this year. Flows, obviously, very important part, and I think it'd be good to educate the community here on how you could potentially use some of these things. So, how's everyone been? You all been good? Thank you very much for the congratulations. I appreciate that very much. Did Nancy Pelosi sell Apple? I'm not too sure. Did she? Does someone can confirm that to us? So let's have a look through the markets. We're going to split this show into 3 parts. First up, we're going to talk about the medium term and the long term. Okay. So would you like that, everyone? The medium term and the long term to start off with? I think it's really important because obviously we're talking about 3 different types of trading. Investing, which is your long-term potential. Medium term, what's going to happen over the next 3, 6, 12 months into maybe the next 2 years. And then, of course, the short term, which a lot of us are all here for, which is talking about where the S&P 500 is right now and some possibilities leading into this FOMC event. We'll be talking about all of those. All right, seems like some people would like that. Janet Yellen is Tom's grandmother. You sure about that? Real rugged DIY? I'd be telling her off if that was true. I'd say, what are you doing? Okay, so let's get into looks like everyone wants the medium to long term. So we'll start off here with the thought processes of the medium term. And one of those I want to bring up straight away has to do with this chart here, which is just a superimposed kind of image of course, the overall stimulation. I believe that we should all keep in mind throughout realistically since monetary policy, but throughout 2023 into 24, that the system is fundamentally broken. And you can see that today with that bank that JP Morgan's just been almost illegally allowed to purchase. I mean, can you believe they managed to get away with that one? They never would have been able to purchase such an amazingly large bank, and now they've been able to do it with probably peanuts. So no wonder the stock is up today. So first up, we have to understand that the system is broken. Therefore, we know that the Federal Reserve and central banks have the markets back to a degree. Now, how much they have to fight inflation still, stickiness, all of these types of things is still to be, that's the question mark, okay? How much have they broken the system? That's the question mark. So we know that the stimulation is there, and that's what the market's betting on right now. But this purple line here shows divergence, all right? So let's talk long term. I'm actually bullish on the markets. There's a good interview with Stanley Druckenmiller, who I consider probably the best investor on the planet. And he talks about the unrivaled times that we're in, but also the potential of when the Federal Reserve comes back in and bazookas the market, because we all know it's going to happen, that they most likely will create a very nice bull run. So first up, my long term, that is next, let's call it 1 to 5 year scenario. Obviously, long term is technically longer than that. First up, I'm bullish. Okay, I'm bull on America, and I don't believe a Great Depression is coming. And I think that the Federal Reserve will do anything that it takes, e.g., all of these central banks will do anything that it takes. But here's where the problem is. Let's see if everyone agrees with that. Are you all optimistic long term, or do you think a Great Depression is coming? I mean, it's open to interpretation each way. So that's that kind of longer term approach. I remain very bullish on stocks like Microsoft. I remain very bullish on these pairs. And I think it's very important that we just aspect this because, I was getting a bit of feedback and people are saying he's so bearish. Yes, I am bearish on the middle term, which we'll talk about now. So first up, middle term, we're here. I don't believe the risk reward upside at this point is worth it. Okay. So let's talk about some scenarios of where we are. We're here, we're at 41, kind of 70. We're down a little bit here into the FOMC. And the most likely course of action into the FOMC would probably be like some kind of pull, bit of a dump after the FOMC. And then we maybe find out with non-farm payrolls or something somewhere out. But if this market chooses to breach this level, which we've talked about a lot, this highs over here, the 4200s, the gaps, all of that zone, where is the next level for this? I would say that the next level is most likely somewhere up in here in the 4300 to 4350 range. And we've said that several times. Now, I call that a short-term move. And we'll discuss it later on. If that happens, and this purple line here, which I'll update you on, if that purple line's like this, and this market's like this, yeah, I think the options are well worth it. This is my opinion only, but let's just say options are worth it. Did I think on Friday that we might find some sellers here? Yes, I did. Okay. But the way you take the instrument is very important. For anyone that's done our advanced scalping masterclass, you would know that you usually wait for a sequence, and that sequence on the small time frame will get you in for the CFD future style trades or the ETF trades. If you want to pull the trigger at someone like this zone and you've got a longer term picture, let's say the next 3 to 12 months, generally you'd be using put spreads. Okay. That's just my opinion. I like put spreads and I like selling them, or at least buying them outside of the money. Basically, if you think of like a bell curve, that's kind of how like options are. Yeah. They're priced like this, the bell curve. And then I like to get outside of that kind of 68% to make them cheap. So they give me good ratio. I'm all about the ratio. So I would consider that a bearish level. Okay. But it's very important that we understand the way in which it's bearish, because it's a little bit different depending on your type or style. Now, this is where the question mark will happen. If this purple line turns and starts moving up with the market again, I think it's going to be incredibly hard for bears to overcome. We almost rely on the Fed sticking to their plan now. 25 basis points this week. I'm going to put a poll in there. What do you guys think? Do you think they're going to do 25 basis points? Yes or no? What do you think? I'll read some comments before we keep going in just a second here. Tom the degen. What am I degenning, MH? What am I degenning? Tell me. No degen. We did. Look, you always have risk management on everything that you do. Could you be wrong? Yes. Remember, the difference between a great trader and a crappy trader is purely their risk management and their ability to recognize when they have edge. All right, let's do this poll. Will the Fed raise 25 BPS? Yes. No. That's it. You don't get any other choice. No other choices. That's what we'll do. We'll get rid of that. All right, here we go. You guys can select. So obviously we know most people, someone says 0.125. Yeah, we'll see. So there you go. There's the poll. All right, let's read a couple of comments here if I can get back through them now that everyone's spammed the room with yeses and nos. And we'll just see what everyone's saying, but then we'll go through and we'll keep going through the points here. I live and work here and a huge recession is underway, says Bill. Yep, there's definitely a recession. I mean, the Fed wouldn't have said mild recession without it being probably worse. Again, the Druck, this is not my opinion. It's the opinion of someone that's made some damn good money over the years. He thinks hard landing. Okay. So he thinks hard landing. However, he admits in his recent speech, and I totally agree with him, that this little purple line is going to go like that. And that's going to create, a 1 to kind of 3 year nice period for investors. Okay. So it's going to be like that sugar rush kind of 2020, but to a lesser degree. So, all right, let's keep going through the middle term here. So we think the Fed's going to raise rates. And then according to their dot plot, which we've seen before, it kind of looks like this, where they don't cut until 24. Now, if they want to deal with inflation, okay, this inflation is sticky. You can see it's sticky. Part of the reason why gold is even doing well has to do with its stickiness. So if we're considering that sticky inflation, or at least there's some remnants of stickiness in things like shelter and other things, generally speaking, inflation doesn't go down like this. Instead, the way it goes down is kind of like that. And we can't make the same mistakes that we did before. So you have to think that either central banks are going to hold and live to their word, and the market's going to crack it because they believe there should be a cut in 2023, or the Fed's going to go back on its word due to whatever reason. So if you're a bear, you basically have to rely on the Federal Reserve not lying to you. Now, I want to know what the chat thinks. What do you think? No lying, Fed. No lying. What do you think? The Fed's lying to us or not? David 13 says there's a new bull market. Again, it comes down to the Fed, David. Have they backed Silicon Valley Bank? Yes. They went through and they backed that. And that proves when that happened, which is here, when that happened central bank wise, it proved to the market that every single time a problem's going to happen, they're just going to inject. So it's just the same issue that we've always found. They lost some credibility there with the markets. But again, this line is very important. This is just one reason, but it's obviously a reason I'm looking at here. So if we believe a new bull market is underway, you'll have to see this line come with the market and basically the Fed's, let's call it bluff to be called. So if the Fed is lying, yeah, bears are stuffed. And my thesis is dead too. Because basically at that point, what you'll have to believe is that they're just going to keep going in and they're not going to fix that dot plot where it needs to be. So that's going to be a big point here. Chris Hart says the Fed has lied to us since COVID. Why would now be different? Well, yeah, I mean, let's look at the weight of evidence would be inflation is transitory. Well, it wasn't. The market kind of realized that. Then they say no recession at all. And then we get a recession. And this is the main bull case, by the way. The main bull case is literally the central banks are lying and you have to believe they're backing the market. And then the last one is there's a mild recession, which the market already sniffed out last year is probably a pretty bad recession, hence why we are so inverted on bond yields. So, yeah, I mean, weight of evidence, you would say no, and they've been lying to us all the time, and it's not very good. So the dot plot, they're going to make it. This is the question. Are they going to wreck the economy long term or fix it and reset it a little bit here? And that is something that we're all arguing. That's really the crux of it. Are they going to sugar rush the economy straight away as soon as they see any problems, or are they going to stick to the plan of getting rid of inflation? Because they basically admitted they're going to put the economy in the dirt. And then the question is, will they inject? Because remember, this line here, as it goes up, it inflates asset prices. And we know the top asset prices are always going to be in big tech, which is why big tech's doing so well. That's a huge component of it. Hence why we also get these massive valuations. So that's okay. D.A. Hobie, I've seen your comments a few times, says recession was in 2022 when we had 2 negative quarters of GDP. Technically, you are absolutely correct. And he says, stop selling fear. I'm not selling fear, man. I'm selling the reality of the situation. So, you can say no recession. Again, I don't really care about the word recession. I just care about this. Basically, what is the central bank going to do? Okay? That's just my opinion. But I understand, D.A. Hobie. I've seen your comments. It's okay. I even responded to you if you actually had a look there. The more that puts go up, the more the market will go up. Yep, that's correct. So this is the next factor of the bulls. So we'll have a look here at the factor of the bulls. If we go over to the 19th of May, you might see a reading here. And this reading says, look at that. I'm just going to put that down one second. I'll just quickly close the room here. So O'Brien brings in the bear case, which is that they keep having to raise yields. So that is also a factor. So, okay, 400 puts. 400 puts, 166,000. A lot of hedging for the FOMC at the moment as well. But if we go out to the 6th, which is obviously 16th, you can see here, big options expiration again. Bit of calls on the 420. 400s, and then the 390s, 127,000. So there's a ton of puts, and it doesn't really matter which third week you look at. There's heaps of puts in the market. So part of the reason the market hasn't been able to go down is the bazooka from the central banks, and part of the reason is that they ruin their credibility again, which was just starting to deem around when they bailed all of these banks. So, of course, today, again, they've kind of softened it and allowed JP Morgan to become even bigger than they've ever been. So the bull case is basically central banks and the fact that everyone's so bearish, it's hard to go down. And that doesn't really change the fact that I believe either around right here or if we break through this point, 4,300, 4,350 area, will present pretty interesting opportunities for bears, at least on the short term. And for that to get more wild, you're going to need to see some extra catalysts. And those catalysts are probably going to be basically the market and the Fed fighting with each other. If you see that, more chance that the markets will do this. So anyway, that's my opinion on the middle term. At this point, I still think that there is a case to be made for markets to be in worse shape later on this year, but it relies a lot on central banks not bazookaing the market. If they do, you'll have to switch. Unfortunately, we must keep flexible in that mindset. And yes, I still remain bearish in that mindset and that area because that's plausibly what should happen macro-wise. The question is, will the central banks allow it? MH says, seeing too many sell in May and go away. Yeah, it's interesting to see that this year. So I shifted it onto Twitter just to bring up that point over here. And I just put 95 years in. So obviously this is the most of the history that we've seen and where we're finding ourselves. Now, sell in May and go away hasn't worked in well over a decade. So that's 10 years of it not working. So as the jock says over here, maybe yes, since the debt ceiling will arrive. Yeah, I mean, that's Toby says, I'm ready for everyone else to see sell in May so I can continue to buy in. Fair enough, man. So basically we've got a point where if you went through all of the history of seasonality of the market, this is historically the short period. And it hasn't been for 10 years plus. Okay. It just has not been. It's been horrendous. Sell in May and go away has been one of the worst seasonals for that period of time. So we're basically at a point here where, yes, if you took all of the weight of evidence, you would say there's a slight correlation with weakness in May. If you took just a 10-year correlation, you'll find it's not there. It's more of a sideways kind of action like this, and then maybe like that. And if they're the two real main factors. So a lot of people are doing sell in May. Historically, I mean, data-wise, you could say, yes, it's there. But I'm telling you right now, it is not there in the last 10 years. So take of that what you will. That's a big one here. Yeah, appreciate that, Hobie. Look, again, I'm happy to even maybe have a few people on the show in the future that have good opinions if you're interested. You know, I really, with one of the announcements I want to make for this show is, you know, I guess, yes, I would like to offer a little bit more value in terms of flow. So I will be bringing in some flow charts, but I do think that central banks are the big one here. Hobie says, so what happens if the Fed cuts rates and all the side money and the bond money come running back into the market this year? Well, it would bazooka up, man. If the money from the flows of money market funds switches, you know, the history had been very bullish. So if we look here, money market fund assets, again, this is just one show of charts, but I do think that if we see a switch on this, then it's hard to break that evidence. The evidence would be, again, assets going to unprecedentedly ridiculous prices, specifically in big tech. I'm open to that idea, but I just don't think, I think a lot of the stats would say that the risk reward, which is something that you're looking at, you know, Sharpe ratio, at the moment, if you were to say, what is the best asset in the class in the world at the moment? I'm going to ask everybody actually in the chat, what do you reckon the best asset class in the world is right now? What's your opinion of the best asset class in the world? And yes, we will get into the market soon. Don't worry. It's coming up very, very soon. I'm going to close this poll. Where are we here? 93% of you, even more than the economists, believe a 25 basis point hike is happening. So let's get the best asset class in the world. If you had to go and put in the money right now and you said, you have to buy, okay, you have to buy. What are you going to buy? Let's be realistic. This is everything you've got. So you have to think about safety. What is it? It could be cash. It could be some type of bond. It could be the stock market. It could be big tech. What are you going to put? Let's say it's $1 million. What would you put it in? So a lot of people saying BTC. I really find that hard to believe you'd put all your money if you had $1 million in BTC. But, you know, that's all right. Dogecoin. Geez, that's wild. I mean, some people will put it in BTC, I'm sure, but I just would not do that. few people saying financial sector is interesting. Yeah, financial sector is an interesting one. Cash and TLT. Yeah, we're only allowed one asset though. A lot of people go in BTC. TLT leaps. Yeah, so I think probably the ones that I'd be looking at this stage, if I had to, would probably actually be around banks. The central banks of the world and also the governments kind of basically said, hey, you know, your bonds are protected. I mean, it's almost ridiculous, especially here in Australia. You know, our top big four banks are basically protected by the government. Now, we always knew that to a degree, or at least we suspected it, but it's become even more apparent. So you can get 6 to 7% on some of those. 6 to 7% yielding on a bond, on a senior. So that is like a first grade bond, like a top end bond. That's pretty amazing that you can get that. So that's actually better than the average return in some years for the S&P. Obviously, the average return overall is like 9, something like that. But yeah, it's pretty amazing. So I'd probably go with that kind of thing. We already knew that, says JJ. Yeah, that's a big one there. Gold looks like it's going up. It's been held by the 1973 support. Yeah, we'll look at gold very soon. So cash and TLT and Bitcoin and oil. A lot of people liking oil. That seems to be the main ones here. Yeah, so to answer the question, yes, if we saw some of these other signs, including, I mean, we've obviously got breadth, we've obviously got thrust, we've obviously got, you know, the switches in the markets that you would usually see for a rally. So the switches look like this. This is the first trend change. It's not that I wasn't bullish there. I was bullish here. It's pretty bearish there. Obviously, I've been bearish through that point. I switched bullish here, switched bearish there for sure, in this opinion. Like, this is pretty much where I've been wrong so far. So, you know, I haven't really done anything, but the market's done nothing. But these areas are where it's at. So if you're kind of looking at this on the piece of paper, you're saying, okay, well, we've got peaks and troughs and higher peaks and higher troughs and higher peaks and higher troughs and higher peaks. And then you get a small shift in here, which is that high, low, high, high. Usually a first time frame change of trend, which still hasn't realistically been stolen yet, though it's probably been stolen in the futures. And to really switch this to the downside, well, we know where the true fight is. It's going to be down here at the 3,800 should we get there. So we've got some openings. Let's talk about it past the middle term. So my middle term is still negative. I think that the US is probably going for a pretty, like maybe more of a hard landing. It could be wrong. Again, you've got to remain flexible and you've got to say, okay, well, is the risk worth the reward? So say I had to buy this price. Do I like that price for a medium term? Not really. Is it bad? No. If I had to, I would if I had a long term, but I don't like it because basically the forward PE is crap and the breadth is trash. Now, if we think about breadth, look at this chart here. This is the final part of the middle term. So Russell 3000 talked about the breadth there being pretty bad. This is the NDX, so basically the Nasdaq versus the equal weighted Nasdaq. Now, when you see the big kahunas jump off into a big run, and this is just the charts over time, just saying this is the charts over time, when you get them leading by too much, the big kahunas are leading hard here. You can see, look at this rally. This is all big stocks. We already know this, I understand. But when this type of thing occurs, it always says be cautious. Okay? I'm not saying be, you know, horrendous and sell everything and run away and all those types of stuff. It's not really a time I think markets are cheap, because usually when you get these types of runs with these big stocks, it comes with sideways to down action. So even here, when we get that huge acceleration, we get a lot of volatility that comes through there. We get volatility that comes after that big acceleration. Huge acceleration, obviously a horror show. Huge acceleration, horror show. Huge acceleration, not good. It's synonymous with badness coming. Again, I'm not demonstrating here it's a horror crash. I just don't think it's worth the valuations. Okay, so anyway, that's my opinion on the middle term. Steve says, the narrative has always been wrong since April of 2021, in my opinion. The narrative doesn't mean anything when you're down 20% from all-time highs. I'm not sure about the narrative there that you're talking about, but yeah. No way this economy is going to get through this much inflation. Yeah, it seems improbable. There's also a little chart I shared from Bloomberg here, which shows. I mean, look at this. Look, this is the percentage probability chances of recession. UK up there with number one, New Zealand surprisingly number two, US obviously number three. I'd say it's higher than that, but anyway, and then India 0. So if you actually look at the BRICS countries, as somebody mentions over here, it's pretty funny how like some of these countries are just sitting so much better overall from the thing. Now, this person Avron says here, "Lol, what nonsense! Global trade is too connected." Well, it's more disconnected than it was. It was obviously hugely connected. Now it's a little bit more disconnected. Valuations across the board, all of that stuff. All right, let's get into the charts. We'll start off here with the Dr. Copper because it's finding some bulls at the moment. So for again a thesis that shows you the market is overvalued, you really do need copper to fall. And that's showing you that probably a recession, weakness worldwide, global, all of that type of stuff. It didn't break through. If it does, we'll be there talking about it. I think the really critical point, though, is 3.7. So it may be worthwhile setting alerts on 3.7 in the future. And if it does happen, that's going to be a big one. Finkin79 says India growth rate seems unstoppable, doing great. Look, you have to be bullish on India. It's the stock market's pretty high. So the stock market's already priced it in for a while now. It was a great purchase a few years ago. At the moment, it's probably expensive, but yes, they've got the best demographic in the world. No one has a better demographic than them. And with everything that happened with the whole, Ukraine, Russia stuff, it really did help them out as well. They're getting a lot more money, let's just say, being invested into it. Apple's just one announcement of that. Okay, so copper's the first one. Let's go over to yields. Both of those spiking into the FOMC, I guess, spiking up to, account for the 25 basis point hike that's meant to be there. Dollar index, interestingly, is kind of, it's so tough to read through here. And I've really been thinking about dollar index quite a lot, and the trend is obviously down. The way I wanted to see it was breaching this trend line to give us the bull kind of catalyst. We know down here there's buyers. We know up here there's sellers. Sure, that's nothing new. In this middling area, it's hard, okay? And I think that's hard because of non-farm payrolls. So NFP is a really big currency mover, and non-farm payrolls is this week, by the way, Friday. It's the jobs report. So I don't see dollar giving us an exceptional trade until then. Usually gold is also having a little bit of a tough time around this point. Now, gold comes off my trend line. It's maybe going to prove me wrong. I said this trend line was weakening. And yeah, I guess I still maintain that. Up here is where the selling has begun for gold. But if it breaks through 2015, I think pullback at that point would be a pretty good trade. So I'm actually not on the train of the gold at this stage. As in, I'm not really too interested in buying or selling just here. But the key is to have the patience to react to the market. Last week in the private community, for anyone that's here, they can attest to it. Anyone here from the private community? Dave, somebody else here? Obviously, yeah, I was super short into that zone. And I said at the time, very replicatable trade, exceptionally good risk management, great RR, ends up being a 2-to-1 trade. Pretty simple, in my opinion. Very replicatable area. Here, I'm more uncertain. Obviously, there's demand there, no doubt, but the trend line was weakening from price action. So if this now breaches out, what that tells you is it says, well, it's probably trapped some shorters that are in here trying to short through this zone without getting the confirmation. So if it then gets through 2015, pullbacks should be met by buy demand then, and then we go back to test it up. And at that point, I would really like to buy in that zone if that occurred. So that's going to be a big point for gold. I am still bullish gold, medium long. I just don't really like it in this zone unless we see the right things. Remember, the difference between really great traders, like I'm sure a lot of you are out there, and novice traders is not your ability necessarily to predict. You might have an opinion. Your opinion is stock market's up this week. Okay. Then it goes up this week. And you might say, yeah, look, I got it right. Okay, what are you going to do with that? Buy at the start of the week and get that right enough? Well, technically 68% of the time, the market will be up each week. So yeah, the stats are actually in your favor on that one. That's not really a business plan. So we always want to be thinking about that way. Let's have a look at silver. A few people mentioning silver. Oh yeah. Well, silver's usually an economy read as well. So again, it's very different. Like silver's doing really great. Look at this. I mean, could it be that they're both pricing stagflation? I don't know. Again, it's clear that the central banks probably have an inflation problem still that everyone's ignoring. But yeah, silver and gold are theoretically stagflation plays in the rotation quads. So yeah, that's a little bit looks pretty good. Nice little rejections. You couldn't hate on the chart. I probably wouldn't try to sell silver here. Would I buy it? Probably not. I'm not really too interested in that type of breakout trade in the FOMC and non-farm payrolls, but yeah, I mean, because it's a longer term one based on more a daily, you can see that acceleration coming off, and really the go signal for that is more likely this breach of trend line, and it's getting into kind of the first target zone, which would be up here in the highs. Verified News says, I think silver will pull back during the day, trading a put on silver for that. Well, at least you're covering your back here on that one. You've got to make the thing there. Always block who? Artemis. Don't know who that is. Greg Kerr says, Tom, what do you think about the debt market? Is it about to implode? I doubt it. It depends which part of the debt market you mean, Greg. If you're talking about are banks going to suffer some consequences of these really dodgy loans that are going to going to like things like Silicon Valley Bank and all these other, well, they've been lending to angel investors, I guess, and trash companies that make no money. Yeah, that's going to be bad. Commercial property is the most worrying sign in the markets at the moment. And obviously, Munger's come out today and people are talking about it. Commercial property is the one worst sector at the moment. I think it probably will provide opportunity in the future. I'm not sure if its time is now. It's looking the worst. So commercial property debt could be one of the big ones here. GRT Kara says, reality check for the perma bulls. Trimming 9% to 5% is easy. Trimming 5 to 2 will take unemployment to hit 5%, which is a recession. Yeah, look again, you could say the recession's the overused word. It already technically happened. Then they lied and changed everything and then said, oh, no, it didn't happen. So that's the thing. It's, what does it even mean? All we care about is whether the market is cheap or whether it is expensive and whether there is a replicatable trade throughout any of that. Or oiled, that is annoying. That is really annoying. Bugger. I really wanted that trade. I got to say, I didn't see my alert before because I didn't get one. I really wanted it there. That would have been a sweet short. If you're on the oil short on standard support becomes resistance, and that being the supply, you've done really well. That's a good entry. Shame. I was going to go over to this and say, now guys, let's talk about this, but I hadn't got an alert on my phone yet. That would be a big thing here. Eccentric says, thoughts on using GME as a good indicator for the current liquidity market. Look, I've used GME and AMC in the past. I actually haven't tracked them in a while, so we can load them up here as we talk about some of the big stocks into this week. I don't want to go over those charts, so we'll just go over this one. So we'll go on GME. I haven't looked at GameStop, but usually that shows a bit of FOMO in markets if it's been going well. I wouldn't say it's been doing anything in particular. So AMC, I assume, is in the dirt nowadays. I don't know. It's finally over this stuff. Thank goodness. Yeah, I mean, look, we used it. If you actually overlay an SPX onto it, I know it sounds stupid, but what it was showing retail FOMO. So we used it last year to kind of show us that August was ridiculous and it was a good read. And then we saw it again, kind of coming back here into maybe the Feb component. But I wouldn't say it's anywhere near as useful because people got sick of this. And you guys probably don't even want to hear about it. And neither do I really. I'm kind of glad that era is beyond us. Those stocks were trash. At least I said it at the time, hey? Erock88 says ticker symbol top. It's the new GME AMC. Oh no, there's another one. Really? Well, Well, yeah, if that's the new GME AMC, then whenever you see things like this, though, it usually shows you FOMO's coming back into the market. We almost switched on some indicators last week. Yeah, that switch would have been pretty significant. And we didn't get it. We didn't get some of the switches that we wanted. So we wanted to see maybe squeezes move. So at the moment, the squeeze, the pain train, as people will call it, the pain train is the train, technically the bull side. So the pain train has been bullish recently, and it's been bullish pretty much this whole time. It almost switched here. And I mean, it was like one little iota down, the pain train would have switched. And that's basically where you get that options flow switch, where technically things are going to the pain trades to the downside. So the markets will then float on down, usually further, and rallies will be caught with sell-offs. We didn't quite get that. Maybe I'll put it in the next video. So watch that one on YouTube. Finkin79 says AMC bags have been successfully handed off. Meme stock's dead. Yeah, I don't even know what's going on with those. I'm not interesting about it. All right, let's talk about some US 500. So we've done gold. I guess gold could be very bullish if it gets through that zone I've mentioned for a while. I am surprised it's finding so much buyers here in the morning ahead of the FOMC. Maybe it's hedging. I don't know. This is a little supply zone for it. So obviously, if you are a seller, well, theoretically, that's where it should be. And 2015, I think once that's switched, pullback should be met by buy demand. And that point will be quite interesting on this market. But yeah, look, in non-farm payrolls this week, I'm always very, very cautious of gold and dollar trades if I'm going to carry them into non-farm payrolls. That's when you get a lot of false breaks. So just to give you an example of a false break, I'll use a 3-minute chart. This was advanced GDP. You can see you get that little smidgen. Now, on some brokers, that went to a higher high. And if you had a stop loss here, you would have been taken out. So you've just got to be really careful about that. First move is often the false move on these markets. Let's move over to the US 500. Let's talk about stocks now into the FOMC. It's a heavily hedged week. So depending on how, unless I guess if the central banks, let's say the Fed decides to shock the market, and then of course the markets will go down. Usually the trade that we've seen recently has been the markets will kind of do a fake out. So they'll move in the opposite direction first, and then they'll kind of rally through or dump through. So they'll kind of do something like this, or they'll do something like this, and they'll move the first reaction on the first couple of days will often be wrong. Then they'll dump it into, or make the move after their FOMC, especially into the minute making speeches. So if we have a look here, and we scroll through to up here onto FOMC statement. So usually this press, the difference between the statement and the press conference, that can be where the market switches. How many people have seen that during the FOMCs? If you've watched a few FOMCs, you would know that whatever this does often will be reversed by the press conference. What do you think, chat? Let me know. By the way, thanks so much. Thanks so many of you coming out. There's over 1,100 people here. If you want to help the stream get back into the groove, then definitely give it a thumbs up. I always appreciate that. You guys are the best. There's no doubt we have the best community on the internet for this stuff. Also, there was a chat revenue of $3. I must have missed it. It's from Brandon, or $3 Australian. So it's 2 American dollars. Very good. Love American dollars. We love them. My American housemate used to say, it's always American, Tom, American. As in can do it attitude. Brandon G419, $1.99. Lumber futures puking. Is it a sign of weakening? Yeah, so a lot of people follow lumber. I haven't found a strong correlation with lumber, but look, agriculture is also puking. You can also see that, I'd rather not use that word, I guess. We'll just have a child. You don't want to talk about the word puke, okay? So we'll go with it's falling. So lumber, yes, that's not doing so well. Then we've also got a few other things, agricultural stocks, and technically if copper starts to fail, that will also be there. So you can see here, even across the board, all of these other things. Thank you very much, Brandon G419. That is awesome. Thanks for all the support. Let's move over. Where's the lumber? There's the lumber. So a lot of people look at this, and again, correlations. Lumber has already been down for a while. So often people go, wow, look at this. Terrible, terrible. I just haven't seen it. In the 1970s and I think 60s, lumber was an amazing indicator. So it just shows you how the times, people tell me, like I've talked to a lot of older traders about this stuff, and they say, oh man, I used to use the lumber, but it just doesn't show me there. Somebody said something about AMD. Richard C says, short AMD ahead of earnings, computer sales have been down. Yeah, that's true. Depends again what the expectations are though. LV Junk and Hauling, $10. Thank you very much. $10. Appreciate that, man. Thank you for your support. Kobe says, I've studied the past FOMC meetings. Okay, this is good. Going back several months, and it seems to often dump upon the rate decision, but rips 5 minutes after the JPOW hops on the mic, and it's been a nice trade. Yeah, the first move has been often false, and then you've seen that kind of rip, or there's been dumps as well, but yeah, there's been a lot of rips from the JPOW kind of circus when he comes on and says something. He's like, hello, we will use all the tools, and the market just goes up 4% up. So you've got to be a little bit careful here about initial sells this week and getting too excited about them. If the market really wanted to initially sell, this would have been a pretty good zone for it. Now what you're looking for is you've kind of got this high, you've got this low, you've got this higher high. You kind of need to get underneath there to really instigate further shorting. At these levels, let's talk about the key levels here. We have, of course, all of these highs with potential SLHs. So that's a stop loss hunt. Now, I say a close above 42.17 would be big, because if you get a close above 42.17, you've taken out the futures market highs. There is almost nothing between there and realistically filling into 4,300, 4,350. Now, hear me out. If I was, and I've had this extreme zone here for a long time, if I was a big fund manager, and I just need to put in the other gap that's there, then I think most eyes will be on here. Now we have to put ourselves in the mind of the trader. The mind of, this is the short time frame. What is a trader going to do, or more importantly, what are people going to feel when certain things occur? Right here, bears are questioning everything. Okay, no doubt. They're like, what the hell's going on? This market should have probably shorted here. I can understand this, blah, blah, blah. Why are we here again? We should have already been down. Silicon Valley Bank, whatever. I don't care about the banks. I'm not even concerned about them. This is more of a story of obviously if the Fed actually live up to what they're meant to be doing. So if we get up here, what's that going to do? It's going to trigger everyone's stop losses here. This is where patience comes into it. I think it's a very important level to have on your charts. So it's actually not 42.03. It's 42.17 on the futures. But I would have this as like a snippet level for me to be looking at. There's a 42.27 gap. If we close above here, there's a high chance that the markets will continue to move. So that's that 42.17. Will continue to move into this level. At this level, we already know what happened here. We successfully navigated that one. August was, I think, easier than this one. And I'm not even kidding. That was easy in comparison. If you've been around enough, this was pretty easily navigatable. Obviously, we started to heavily consider shorts in here. And I remember it then switched and it became very obvious. And again, if we see that purple line going down, and which I'll update you guys on, central bank liquidity, and we see the market kind of moving up, and then it hits into these levels, there's going to be a lot of people that pull the trigger around here. And they just go full FOMO action. And that's the best time that they've induced liquidity, which is kind of the idea that people talk about nowadays. And at these levels, we will have done that. Now, if the markets want to sell earlier, there's a good chance that people will have stop losses up in these levels, and we could do something like this. At this point, you're probably pretty safe that that was a false break, and there's a good chance that the markets will actually dump because they've induced. Effectively, the market is trapped. It's super hard being that patient as a day trader, especially as a swing. That's where it really is a swing. That's more of a swing setup. So if that occurs, yeah, I'll be bearish. Okay, let's go. All right, we'll see. If the market goes daily closes above here, well, I think it's going there. If I have short positions here, which I do, obviously puts, which I'm talking about, then I don't really care as long as I have time on my side. Time is important. Remember, it's not really where it goes in between. It's where does it end when I need it to end. So that's going to be very, very important here. AJ says, oh, markets are testing my patience all right, but I'll come out on top eventually. Yeah, look, it's not easy, man. AJ, it's not, well, I'm assuming I'm assuming here it's been very, very difficult to navigate. You've had to look for extremes each time. You know, again, this was kind of relatively easy to see buyers would recommence. I thought maybe some more sellers would come in around here. They certainly haven't. And this zone here has been a little bit of a question mark. Okay, because yes, there is a lot of, this has been annoying. This is probably the most annoying zone I can think of in quite some time. It's even more annoying than that zone there, which I remember. If you're a real bear in the markets, though, remember you haven't actually switched proper trend until you dump underneath that level. Then, oh man, the sharks will come out and dance around, depending on how it reacts around there. So first up this week, let's go back to those key levels. Let's get them on our charts. Let's make sure we're all aware of them. 41.77 is a high here with a lot of stop losses. Closes above this and the 4,200 will be relatively big. Not hitting it and then rejecting it. That's more of a stop loss hunt. Closes. Okay, so we're looking for closes above these levels. If you want to be dirty and go down and dirty on the small time frame charts, let's look at a couple of levels. First up, somewhere around this 4180 to 4200. I think switches there could be relatively good for people trying to go against the grain. If you're feeling like, well, I want to be bullish. I want to be bullish now that I've seen what I've seen. I want to be bullish. Where are the bullish levels? Well, we know that this is a heavily traded zone, 41.28. We also know that there's buyers there because they built a position. Effectively, this is premium, this is fair value, this is cheap. And somewhere between the fair value and the cheap, you would expect buyers to recommence. So again, that's kind of like a level I'd be looking at as a potential zone. Do with it whatever you will. You obviously have to make your own decisions. But that's kind of where I could see buyers recommencing. As of today's action that we've seen so far, we've obviously come in short. If you actually look at the stats, every time the markets come in long, it's been a good day for bears generally. And every day the markets have gone in short, in the futures this is, then it's been a great day for the bulls. So it's not maybe the best, it's already coming down. But look, there is a little switch here, which is this red line. I do think that if we get underneath that, there might be some tight weakness for a little while through the session. And there's a possibility, again, that we end up somewhere around in here, maybe before the Wednesday FOMC. So we're looking for probably a breakout past something like a 41.61. This is going to be tough, 41.50. It's not a high probability style trade, but that's there. This is also there where it's like spikes up and then comes back through that level, creating, again, shorts into the heavily traded zone. I do think that you'll probably see buyers somewhere in that commitment level of 41.28. So these are all very short time frame trades. Motivation Healing says it's super. There's actually better trades in currency right now. I'm not even joking. Currency is so much easier at this over the last 3 weeks. It's super hard not to short gold at 2,000. Yeah, but you've seen gold at 2,000 already quite a few times. I'm not sure I would. It may short there, but again, it's been there 4 times. It's become obvious. Now, usually there's more of a trap to be set. Time around 3 to 4 months, Michael. Paul says, Tom, how does the FRC news affect KRE? Yeah, it's an interesting one. So we all happy with some of those zones? Again, if you're a bear, you're really holding on to the hopes of these zones here. And all of these three, this 1, 2, and 3 zones, that's where the bears, if they're going to come in, happens. The problem is it's more than likely going to happen due to some FOMC event, and it's going to go like that. So it's going to be a spiky thing. I think it's a good week to be patient and react to the market, showing you what it's done. I'll give you a tip. Everybody out there in this community, 1,200 of you right now, thank you very much for viewing. The tip that made me better at trading was very boring, and that boring tip is being patient and waiting for levels that you thought were probably impossible. And I know that sucks, but when you wait, It is horrible. But when you see it, you're like, damn. Ask yourself this question. I have the chat one. I want you guys to answer this. How many times have you gotten into a trade? The trade's then gone to the level you thought was possible, taken that level, and then come off in the direction you wanted. Does that happen to you more often than not? If the answer is yes, then you're not being patient enough. And that sucks, but it's the truth. Satish says, so if bottom line, if I was to trade the SPX options, do I go long or short today? Yeah, I know you want to know that, but you've got to remember it's not just about today. You might be positioned in for 2 to 3 days here into the FOMC. What if you get stuck? Bottom line today, man, I'd be neutral. I don't have any interest in this particular level here because I'm being patient for the zones that I believe give the better risk reward trade. I mean, that's just my opinion. Again, live stream last week in the private community, gold was at the zone. I was like, oh, I like that very much. That's a 7 out of 10. I like it very, very much. And if it's at a level like that, not that I give advice, but as a potential level that I've seen before, it's replication. Do I feel comfortable with today's level? Hasn't really taken anything I would say is extreme. Did we go through here? No. Did we go above 4180? No. Did we go above 4200? No. Did we take a slight high? Yes. So I guess on merit, maybe it's like that. Michael H says 75% take profits and then it goes further than I anticipated. Of course, sometimes I don't. Well, that's not too bad, Michael, if you have a profit target that usually goes further. JJ Burgess says, if everyone took that advice, they'd be rich. You mean patience? Well, Andrew F says, what if you're already stuck? Then what you do, Andrew, is you set an alert with a sad face. Okay. I've done this before. So let's say your sad face is up here. You set alert for the sad face, which means you lost your position. Let's just say that's where it is. You set an alert for a smiley face, which means that it's gone back into the direction you need, whatever that catalyst might be. So let's say you believe that's the break that means you're going in. And then you set an alert for a double smiley face if it's at your take profit. Now, or your break, well, maybe you can have this as your break even level. Now, if it doesn't hit the sad face or the smiley face, and it wouldn't even look at the screen, you're just doing mental damage to yourself. What's the point? Go out, chill. You can't change what your decision is. You made a decision, and now you got to stick to your plan. Now, if you went into the decision without a plan, my God, I don't know what to say. But the smiley face, sad face, I've done it before. Well, Gary, you were patient, and I know Gary invested his money at a price of 3,500, 3,480, 3,500 last year. And that's because Gary waited for his forward PE ratios that he wanted. He waited and he waited and he waited and he waited and he bought. And he stuck to his plan, but damn, that is hard. JJ Burris says, I started making money when I started doing that. Smiley face, sad face. Check out the Russell. All right, we'll check the Russell. The Russell looks horrific. The market is, I don't know. I don't have the chart on me, but I want to just show you. You can actually, I can do it. I can do it right now. Check this out. So if we put SPX here on the chart of the Russell, okay, so we've got SPX. We're going to put Nasdaq on there. And then we're going to put weekly. Take a look at the relative performance. Oh, this chart's going to be a bit off, but have a look at that. Look, we'll just switch here the Russell line. The relative performance of the markets this year is super weird. You don't see any Russell 2000 love. Russell's down 12 from that level. If you would look here recently, Nasdaq up 20, SPX down up 15, Russell's like 4 from the October bottoms. So even if you feel like, oh, I've missed the bull run, Well, have you really? There's going to be a lot of sectors that we're going to provide opportunity in the future. So I wouldn't really worry about it too much. The Russell is horrendous. It's the tale of two economies. One economy is the Fed, which is big tech. So basically the Fed bailing everyone out and, being glorious. And the other economy is the real economy, which is the Russell 2000 3000, which is pretty bad. Not looking good at all. Paul Menton, $9.99. Thank you. No worries, Paul. Jar says, being that patient almost not worth the gain/winning. It depends how hard you go on it when you're a pig, man. Druckenmiller's one of his famous quotes is he says, in the markets, bulls make money and bears make money and pigs get slaughtered, is what everyone's been told. But he's here to tell you he was a pig, and when he goes for it, he goes for it. Now, that's if you're being patient and you've seen the replication. Remember, you're talking about it's not worth being patient for the gain/winning. It is worth patient to get the risk rewards. Now, I know someone here, just to say it, a few weeks ago joined one of our courses. He's been in the community for a while, and he was patient and waited for an opportunity. And he knows I'm going to tell him off because I bet you he started to overtrade after this. But he was patient before. He managed to bag a 25-to-1 trade. Now, he waited for the position and he went at it because he looked at quite a lot of things. Now, that's just one trade, but it's still a great entry. It's still a great target, and it's 25-to-1. It's not a joke. That's pretty damn good. Some people never even make 25-to-1s in their life. So 25-to-1 in 2 days is pretty sweet. So it can happen. You just, again, patience is boring, man. I understand. But there'll be usually on any given day, if you took 500 charts, 20 to 30 will give you opportunity that is replicatable to your system. But not all 500 charts. Kevin says the 30 and the 50 week on the Russell is 179, 180, still under the level. Yeah, so look, the Russell 2000 is pretty damn weak. Here's the IWM, obviously, 2-hour chart. I put in the video on the weekend. Is this the short zone? So the Russell, this in here is quite a nice level. And that level is, a bunch of long leg dojis, obviously a fib pullback, decent amount of trade that's gone through this range. And it would make sense also with the stock market, because that's going to be percentage-wise. Stock market probably pushing like that narrative of going up to that 4,200 period. So the Russell is coming up to, I think, a very interesting zone. Look, I don't often target and hit everything on these things, but I do think the Russell's got an interesting zone. Let's have a look at the percentages here. So if the stock market went up to 42.17, yeah, that would be basically the same as the Russell hitting that level. So, yeah, again, I do think they're synergized, and that would be a big bit there. Hyung Jin Lee says, would you mind looking at the semiconductor ETF? Yeah, we can check the semiconductors out. So, again, on the Russell, my only thought process on it is that we are, where are we here? That we're, got a good chance of probably coming back into this level. And I want to see the reaction there during maybe the FOMC event. So it could like spike and then do that. All good, Kevin. I've got to admit, last week was a pretty rough week. I was just asking about my son. It wasn't going all good, but it's all good now. So that's the main thing, yeah? That's why I feel like, in some ways, I don't think I was on it as much last week as I should have been. But don't worry, from now on, I will be. It was just a tough week, one of the worst weeks of my life. All right, let's go over here to Amazon. Let's move over to Amazon and some other stocks. Then we'll go into the semiconductors index and a few sectors because I want to look at sectors. So Amazon is hard and it still looks really bad on a chart. This has me thinking maybe the markets are not bad at pricing in. I mean, it's almost doing the things that you would usually expect. So generally speaking, XLY takes us out of a recession along with XLK. It's not doing that. Yes, it hasn't even made a higher high, Amazon. And Tesla is looking terrible, which we'll look at in a few seconds. And yes, I know the market's open. We're just kind of talking about a few things here. So Amazon is pretty bad. It's created a long leg doji. If it closes above the long leg doji, I think that means the market's going towards 4,300, 4,350. because it would be the same thing. The market would be going above. It just looks really bad in a chart. Let's look at Apple. Apple comes in here. Again, FOMC event will be important. I believe shorters will lie in here. I thought they lied here as well, but we didn't get the switch enough on Apple. We didn't get that kind of main switch that we're looking for. Previous times with Apple, we saw usually it would do something wild, like it would move up super heavy and then just dump. And these are very tough trade levels. Apple wasn't giving us the turns we wanted back here. The S&P 500 was, but the Apple's wasn't. So coming into earnings, I think everything's about here. Expected weekly options highs up there as well. That red box is where I think sellers will recommence. So after earnings, if you're in these zones, specifically around this area in here, this box zone with the expected weekly options high, I'd say it would fade that zone. So that's something to watch out for this week. Permit Fisher, $4.99. Thank you very much, Permit Fisher. Appreciate that. HYG gap down. Yeah, we'll have a look at that one quickly here. Thank you for joining us as well, everybody. HYG is, of course, high yield junk bonds. You don't really want to see that dumping. Well, you do if you're a bear. But yes, you want to see this going down fairly heavily. It's going down because of the yield switches. So that's a component of it. But again, high yield is not really what this whole premise of this market rally is about, is it? It shouldn't be high. I thought it was going to be cut a lot. So it's starting to come back in. US 500, US 100, both showing weakness around here. Thank you very much, Permit. Appreciate that. Jason Smith says baby life is really tough. No, it wasn't. It wasn't that. It was a health thing. And don't worry, it wasn't the sleep deprivation. But I just want everyone to understand that's why it is there. Why does the Russell look so bad? Because Russell is made up of lots of companies that don't make any money. And unfortunately, and banks, regional banks. Let's have a look at KRE. By the way, it looks like that top's kind of dying straight away here in the open. Old AMC is getting smoked. Yeah, so KRE regional banks, they wouldn't like the news today of JP Morgan. JP Morgan getting the sweet one on. It's great for JP. And what a glorious pickup. Jamie will be happy. Jamie Dimon, he'll be happy with himself. This still looks sick. There's nothing going on there. Semiconductors overall, the market technically is switched on semis, at least not a full switch. Underneath there will be a full switch. This is a small switch. Here is about the level that you would expect bears to recommence. I like semis very much. I think they're the best sector to be in middle, medium, long term. I mean, it's pretty obvious that we're going to have semiconductors in our fridge, and then someone will hack our fridge, and then it will try to strangle us in the sleep. Someone said that to me the other day. They're like, there's going to be like semis in everything, and your whole house could be hacked. And I'm like, yeah, that's pretty true. So that is a big thing here. It's a nice looking weekly close. Like, it's on the surface, it's a bullish hammer. There's not much to hate about the chart. It came back off this demand. It's clear that we haven't switched until we get underneath there. We've only done a small time frame switch, which is not probably enough to talk about. But yeah, semis are on the precipice of big levels. You could argue that's a false break, but we won't know that until this turns and makes that lower low. And upon that point, well, then we're looking for these gap fills and back in the 200s. And that's where the bears will be celebrating and dancing around if it does happen. Robo air fryers. There you go. Motivation Healings, thanks for today's stream. Thank you very much for coming back and watching the stream. Next week will be really sweet. I've got some updates. I hope to have them all implemented over the next 2 weeks. Let's have a look at Tesla. So Tesla is, it's a zone of nothingness. I'm still not bullish Tesla. I can't be bullish this company with the price action I've seen. I'm sorry. There's nothing here for me that looks bullish yet. And consumer discretionary across the board is pretty bad. You can see where that weekly close is. Maybe up here you can get that gap fill. And then, I'm still looking for this. I'm still looking for that action, the 143. If the markets do breach out, expect if you're a bull on Tesla, then you need it to make that new higher high, then move towards the gap of 180, and then I still think 144, even 120 is possible here on this chart. Tesla is facing the first crisis, well, the second crisis. The first crisis when you had all those, they couldn't almost fund their own bonds back in the day. But really, this is a big test for Tesla. We're going into a period of time where the Fed have said recession that is hurting the American consumer, and you can see it happening. I mean, otherwise Amazon would be higher. I mean, literally, Amazon's clients are saying, hey, we're going to cancel some of our little web services, the cloud service stuff, and we're also going to purchase trash because we want to purchase something, but we can't afford the expensive stuff, so we're going to purchase trash. That's usually a sign of very weak sales coming through. And we're basically, and the American consumer, 1/3 of the US economy, 1/3, of the world pretty much in terms of consumerism is starting to suffer. And it makes sense. I mean, people are going, well, I don't know if I want to buy a car at 7% finance or whatever it is. What's finance in America right now? Anyone know? I remember Apple in 2003. Yeah, I remember Apple before the oh man, Apple. I wish I held more of those stocks. Apple in 2007, 8, in 8, 9, sorry, the crash. Ooh, it got cheap. It was like 70, it was 85 or $90. I remember buying it at during the depths of hell of the GFC. Jeez, it was cheap. That's before all the massive splits. That'd be like equivalent of thousands now. 6 to 7% for cars. There we go. 7% for mortgage. Yeah, but we can't really use mortgage because mortgage is only for new loans, and most people in America are on super cheap fixed loans. Same in Europe. The only country that really suffers from these loan components is Australia. Will Tesla drop prices again is the big question. I would say so. Notice they moved them to the X. They upped the X and they downed the Y and the 3. Look, they've got to get this is basically like any growth company. They've got to grow the business quickly to get as many cars and infrastructure on the network, which they're already doing a great job of. Look, I own a Tesla, but the price action is not there yet. I'd like to see it through that level, then that to give us the 180, then the 180 to then bring us the 145. My car loan is 6.8. Man, I guess it's still cheap in comparison of history. Remember when I first got into the workforce heavily back 2007, and I remember my net bank, which at the time was a Commonwealth bank account thing, it was like paying like 9%. I was like, yeah. FSD profits, yeah. I agree. Fight for evil. Fighter of evil. My biggest problem with Tesla is too many companies. I really thought Tesla was going to be an AI division as well. And then I found out someone sent me an article a little while ago and said Elon started a new AI business. I was like, what? Like, I don't understand why my Tesla doesn't have satellite linkage capabilities. That would be sweet. Shouldn't I be on the Starlink? Floating around on the Starlink? So anyway, what's happening here on today? We'll go back over to the markets. Just me talking at the moment. No new low here on the stocks, which is fine. So we probably look for a new high to be made today. Then maybe a reaction somewhere around 41.80. Any of these wick highs will be interesting levels. So if we go back to the 2-hour chart, these wick highs in here would be where little bears might try to sit. 4,200, obviously a very critical level as well. You can see it. And then 42.17. So they're the big ones we're looking for. Let's move over to crypto quickly just to finish up here. All bonds down. HYG, Corps, they're all down. Stocks, I'm guessing, are mostly in... Actually, I'll have a look at the sectors here. Let me bring up the sectors for us all. What sectors are going well today? Okay, so we've got gold up 1.88%, semis up 0.74. Again, another day of defensives behind the line. So look, regionals are never going to light JP Morgan dancing off. Big banks are going to like it because it means there's more pie and more unfair competition for them. So their capitalism working at its fairest. And it brings up the last big point I want to make. Remember this, when you're investing, I'm big on one or two components. Number one, moat. That is, how hard is it for other businesses to enter your business and compete with you? The bigger the moat, the better the business. Why do you think I like Microsoft? Untouchable. Untouchable, guys. They got so many crocodiles that you couldn't even get over. You'd have nothing left. You'd be just demolished within the first second. The moat's got a lot of dangerous creatures, toxic eels, all sorts of things. So Microsoft's got a large moat. Probably my biggest moat company in the world. Because governments are mandated, at least in Australia and I think also in America, to use Microsoft for their anti-hack software. It's pretty funny. So yeah, they're pretty good. So JP Morgan obviously has got a big moat now. It's huge. I mean, it just got allowed to be even bigger than it ever has been. It's pretty good for a glorious price. So that's actually good for XLF over the middle term. Now, my point for the moat is actually that in capitalism, which obviously America is, it is best to generally, as long as capitalism is still prevailing, you always go with the big ones. The big boys tend to do very well. And you also want to go with price elasticity in the market. If you've ever wondered, don't buy terrible companies with bad earnings. You know, there's a reason Buffett always claims the same thing. I'd rather buy a great company at a good price than a good company at a great price. It doesn't mean anything to us until you really understand what that is saying is basically big businesses eat the small ones. Microsoft didn't even have cybersecurity a decade ago properly. Now they're suddenly the leader in it. Why? They ate them. They eat them. They go, give that, I'll buy you, I'll buy you, I'll buy you. It's capitalism. That's what happens. Tom, can you check out Robo? Is it an Australian? I thought Robo was the Australian code. Oh, okay, it is Australian, but it's also here in America. ETF, the robotics ETF. Couple of companies in here, probably not the best, but look, I like the. I mean, if you're looking at that on price action alone, you'd have to say, damn, that looks pretty good. Nice base, inverse head and shoulders, left shoulder, head, right shoulder. Good little area. Could claim it's a Wyckoff as well. Obviously, it worked with the Wyckoff here. Beautiful island reversal, back end Wyckoff. Love that very much. So that was good. I don't really have a problem with it. Is it the most glorious chart? I wouldn't trade it, but it's not too bad. What about N phase? Yeah, I've had N phase on my roof for quite a few years now. A few people in the Discord community saying they're watching paint dry for today's market open. Yeah, I guess it's been paint drying for a little while here, except for those two explosive sessions. N phase here, and okay, so it's finally coming down. A few people I know tried to short that up here with puts, and they didn't quite get enough time on it to, I think, allow themselves to get to these levels. Look, I like N phase, but liking it's not enough. If I run like a fixed range over the top of this, okay, interesting. So it's kind of like at the POC level right now. It's probably at a pretty deep fib pullback too. Yeah, it's kind of at the level you generally see buyers at. Interesting. Yeah. I mean, I'd like a little bit more structure, but it's at the levels. SPY breach Friday's highs. Good. At this point, you're looking for that kind of thing. So I know bears won't want to hear that, but you actually want to see SPY breach. It hasn't breached the futures high. It just breached the previous high close. So yeah, again, you kind of, even if you're a bear now, you kind of want the markets to come through these levels and then reject it off, showing that they have induced liquidity. If you're a bull, well, you're just hoping that you clean 42.17 and close it. And then you can get your 4300s and dance around. Gary says 43.30 is the monthly R3. That'd be a pretty extreme move. SPX on its way to 41.82 today. Yeah, could be. Up 1% on my meta short. Congratulations, Jace. Hopefully you can hold your profits there. What about the dollar index? Oh, I'm loath to do the dollar index at the moment. I really am. I just don't think I got an edge on it at this stage. I know that down in here there's buyers. We kind of said that the other day. I know that anything up in here is where the sellers are. I kind of feel a little bit more comfortable on the long for dollar if it gets through this 102.21 or at least my downward trend line. And it just hasn't been able to really whack through that yet. I also know non-farm payrolls and the FOMC are coming up, and that'll move dollar a lot. So I don't know if I want to be positioned on a day that doesn't look too good. Paul says Microsoft is where good tech goes to die. Hey, I think Microsoft been doing a good job the last couple of years. All right, everyone. Well, thank you so much for joining us today. Obviously, we covered a lot of topics. I hope you found some enjoyment in it and you found some value in it. If you did, smash the like button and remember to subscribe. Next week on Monday, we will have hopefully a bit of a change show and a bit of a change demographic, like the way we're doing stuff. And I will be bringing in a bunch of stuff about flows moving forward. Look, I'm always, I appreciate everybody. And I thought maybe we could, I'll just, go and bite the bullet for you guys and pick up something I probably should be having. I don't need it for myself, but I thought it'd be nice to get the old terminal back. So we'll get that. And I'll get a couple of other things as well, which will help just for you guys to see some really cool data. Why not? Just going to make sure I get that cleared first. But anyway, you know what I'm probably talking about. And I think that those types of things can be really helpful for the stream, can really give you some insights into the inner workings of the back ends of stuff. And while I've had it for years and had it before, it's not really anything that I think is super valuable to everybody. It's these little nuanced things that you haven't seen before that you'd be like, oh, okay, that's really cool. So we'll check that out over the next coming weeks. We'll be probably reinventing the show a little bit, and maybe even we'll get a couple of guests on. No, I might even go to try to hunt the Druck this year. I've kind of made it my mission. If you're interested as well on meeting us and getting involved in the community a little bit more, do remember I'm actually coming to America. Happy to do a couple of meetups with people. But we're doing a Las Vegas conference. So if you jump on over to fxevolution.com, if you're interested, I've got some really good speakers coming and maybe some big announcements soon if I can get a couple of these other guys coming. But we've got some great speakers coming. Obviously, I'll be doing a couple of speeches, meet up with the community. You guys are amazing. I'd like to meet people. America, I'm really excited to get there. So it's in 145 days. The numbers are set. Everything's in. And I've forked out. I tell you what, the setup was not as easy as I thought. The old win was like, "Hey, how many people do you want?" I said, "How many do you want?" And then they said some crazy numbers. I was like, "Yeah, all right, go down." But yeah, if you're interested, we're doing Vegas, and then I'll probably also go to New York as well at some point. So I might catch up with a few people there. Yeah, people can come. Obviously, it's ticket. This is a ticket event, but yeah, that's not really. It's more about the community, and the big thing here is I want people to get exposure to some serious speakers. So we've got some pretty serious people coming. If you want to visit the Disney World, hit me up, says Matt K. The Disney World's in Florida, isn't it? I've been to a lot of Disney Worlds. I've been to Tokyo, I think Hong Kong, Shanghai one. Shanghai one had some. I think Shanghai one has the best parts of the Caribbean. It's amazing. When you come into the EU, Mediterranean or something, look at this one. I want to do Vegas. I think it's the best for most people. Look, I would love to do the EU as well. I've been to the EU. I'm half Dutch after all. And yeah, I mean, I'd probably come on over to the EU regardless at some point in the future. But to do a conference there, we'll see how Vegas goes. I'm excited to see everyone in Vegas. Kim Lim says, meet other traders. Traders can be lonely. Yeah, of course. It certainly can be. But it's really great to to do those events. So I just wanted to say we're doing that. We're absolutely on. I'm committed to it. I'm going to make it the best it can be, and I really think people get a lot of value out of it. So yeah, we're going to smash it and bring some serious content. Is that true? Didn't know that, Oz. Do a cruise? Uh, yeah. I mean, I guess. I don't know. I'm pretty happy with the Vegas idea. I've got some plans myself. Don't worry. I usually kind of like float around. We do the sessions and then I stay around for a couple of days as well. So I'm looking forward to meeting people and going out and having a bit of fun. All right. See everyone. Thank you so much. Catch you next week on the stream. And obviously for today, look for those extreme highs. Finally, crypto, Bitcoin took that little high point here. I was looking for crypto to do this. I was liking the idea it would maybe make this high come up into here. I want to reshort it through there. It's a tough one. Bitcoin was very obvious to me here. Down here, I did think buyers would recommence, which they did a little bit lower than my thought process, but still held with the shorts and the longs. And then this is a good short area, and this is what the hell's going on. So FOMC should probably move this one through. JJ says you can rewatch The Hangover before you go. Yeah. All right. The people that shorted gold seem happy. All right, everyone. Catch you for now. Bye bye.